Hey everyone, it's Paul with your Bold Profits for this Tuesday. So I have once again have big news, and this time for the fans of sticks. Now, those of you who have been following the YouTube channel know that I've been putting out these little mini portfolios as freebies to show you the kind of investing that we do in my flagship newsletter called Profits Unlimited. If you're interested in checking out Profits Unlimited, check below and you can go to profitsunlimited.com. It'll tell you a little bit about Profits Unlimited. And by putting together these little mini portfolios on YouTube and through our free e-letter, Bold Profits Daily, the idea is for me to try and show you the kind of themes, the kind of trends, the kind of industries, sectors, stocks that we tend to focus on. So if you've been following me, you know last week that we closed out on one of these mini portfolios called Stuff. And Stuff, if you had followed along from the very beginning when we put it up to when we closed it, would have made you nearly 480%, including a 1,000% plus winner in Tesla. So if you were following along last week, you know that we released Buzz. And if you want to check into that, make sure you go to last week's video and you will find Buzz. So the second mini portfolio that was out there was a portfolio called Sticks. And I used the word was. We are going to call Sticks. We are closing it. And the final results are in. Sticks, as many of you may know, was formed of 5 ETFs. And ETFs, for those of you who are unfamiliar with ETFs these are stocks that are made up of many stocks. In other words, these are stocks that trade in the stock market, yet what you're really buying into is a basket, a group, a portfolio of stocks. And if you want to learn a little bit more about ETFs, please check back into a video where I answered somebody who wanted to know what an ETF is. So just to recap what Sticks is, and I will say that make sure you hold on because we are going to be releasing a new mini portfolio after I close out Sticks and recap it. So Sticks, for those of you who've been following, was filled with the semiconductors ETF, which has the ticker symbol SMH, and it has the world's semiconductor companies, and that was in Sticks. Then it had the solar ETF, which really is an ETF that has all kinds of what we refer to as new energy companies, solar companies, all of the technologies that comprise that sort of group of stocks. And that had the ticker symbol TAN. So that's the S and the T in Sticks. Then we had a housing ETF that has a lot of housing and housing related companies, and that had the ticker symbol ITB. And then we had two X's that formed the Sticks, the X in Sticks. One was XBI, which is a biotech index. And as I mentioned, the ticker symbol is XBI. And the last one is the Industrials ETF, which has the ticker symbol XLI. So this portfolio was begun on March 2nd, 2020. And so before the crash happened, this is when we first put it out. Obviously, I had no idea at the moment the crash was coming. Nonetheless, my point is that even if you had bought in prior to the crash, the results are that this portfolio, the Sticks portfolio, I'm just looking at it, is up 74%. And that compares very, very, very well to the S&P 500, which you'll see on the blue line was up 21%. So the Sticks portfolio was up more than 3 times the S&P 500. So in other words, it was a pretty good deal if you chose to follow along. Obviously, you would have gone through some volatility. Nonetheless, 70+% is nothing to laugh at. It's a good deal. And obviously on YouTube, or if you're following us on Bold Profits, you got it for free. There was nothing that you had to pay for. So in keeping with this tradition of, once again, trying to show you what's in Profits Unlimited. And once again, want to mention that if you want to check out Profits Unlimited, just go to profitsunlimited.com. There'll be a link below for profitsunlimited.com. You can check it out. These mini portfolios, Sticks, Stuff, and Buzz that I released last week, they really show you the kinds of sectors that I believe comprise the most important parts of the fourth industrial revolution and also the world around it. And the new mini portfolio that we are going for this week has the acronym or the lettering, if you will, of HAPI. In other words, it's HAPI and with the smiley emoji because, hey, happiness is good. Happiness is something that I aspire for, and I hope that all of you do as well. All right, so what is in the new HAPI portfolio? That's right, the HAPI portfolio. So the very first letter in HAPI is H, and what we are going to do for the H in the portfolio is buy into a gaming ETF. And the gaming ETF has the ticker symbol HERO, Hero, and it's comprised of so many different gaming companies, video game companies, companies that support that ecosystem. And this is a booming, booming world. Many of you will be shocked to know that the video gaming industry, the gaming industry is now bigger than Hollywood, and it's actually bigger than Hollywood and all of sort of organized sports combined. And this is growing at somewhere between 10 and 15% a year. It is already an industry that is worth well in excess of $200 billion. That's like $200 billion. And it's estimated, like I said, growing at 10 to 15% a year. In other words, this is big and growing very fast. And this is the reason to get into gaming. And when you go and look at what are the factors that are causing gaming to really continue to grow this fast, faster than movies, faster than organized sports, it really goes at who is buying these games. And it is our favorite generations, the millennial generation that has grown up playing these games from the time when they were kids, Gen Z that is doing the same. And then the other aspect is just the continuation of amazing technology being put into gaming consoles. And then what I believe is going to be a continuing explosion of technology as virtual reality, augmented reality, holograms, and all of these things, virtual presence, all start to get integrated into this gaming world. I believe it's going to be an explosion of creativity and also growth and stock market gains, which is why Hero is our very first ETF. The ticker symbol is HERO in our HAPI mini portfolio. All right, so that's number one, HERO, which is a gaming ETF. Second one is ARKF, and this is from our friends at Ark Invest. This is their FinTech ETF. And FinTech, for those of you who are unaware, this is the takeover that's going on right now of the banking system, of our financial system by apps and companies that are really integrating so many different aspects of finance and money and all these various things and making it so easy to do that people are beginning to abandon the old banking system, the old financial system, and starting to use these apps instead of really using the banks. And this is obviously something that is pretty early on. However, I believe that in 2021, the growth in these companies is going to be off the charts because of the fact that so much of what is desired and wanted today as a result of what happened last year with the virus and everything else also meets basic, simple things that so many people have been wanting from our financial system: more convenience, less cost, more control, more access, more of all of these things that really allow you to have more control of your money, more ability to use it in a way that is more useful to your life. And apps like PayPal and Venmo and many others that are coming are really looking to give folks what they want, more access to their money at a cheaper price, greater convenience, greater accessibility. And I believe that this is going to be a huge, massive, massive, massive disruption to a very large industry. The banking, finance, insurance industry, this is an industry that has largely stayed away from doing any kind of innovation. I believe they are ripe to be disrupted. And these apps and the companies that own these apps, I believe they are setting up to do incredibly well, which is why ARKF is the second ETF that is in our HAPI mini portfolio, and that is the Ark Invest Fintech Etf. All right, so we've done H, we've done A. The third one is PRNT. That's the ticker symbol for the 3D printing ETF. Now, if you're a subscriber, a member of Profits Unlimited, you know that across our services in Bold Profits, which is my publisher, we're all in on 3D printing. And I believe is going to completely revolutionize completely the making of everything. And it's happening already in the space industry. And I believe it's going to come to the housing industry and pretty much to every part of the US economy and then the world economy. And with it, it will take 3D printing stocks and rocket them higher. And this is already beginning to happen. And some folks that have been in our services, they will have experienced some of these gains. So I'm sure there'll be some happy subscribers about this. Nonetheless, we are still in the very, very, very early days of this 3D printing revolution, and people are still largely unaware of the enormous capability of this phenomenal, astonishing, amazing technology. And so if you want to get in on this, I believe it's still early. These stocks, I believe, have an enormous amount of runway where they can continue to keep rising as they keep entering old fields where we make things, and then also really help change the way we can get into industries like space and others. And so for that development, I would tell you, buy into the PRNT ETF, which is the 3D printing ETF. All right, so we've done H, we've done A, we've done P, and the last one is a repeat from the STIX mini portfolio. We are going to keep the housing ETF, ITB. This is a ETF that owns companies that make houses, lots of related industries. And the reason to continue to keep this in our mini portfolio is because there is a housing boom that is on. In other words, we have not been making enough houses for in excess of a decade. And we have the millennial generation, Gen Z, that wants to buy houses, ready to buy houses out there. And there is a massive shortage that is out there. And I believe that this shortage is going to continue for some number of years because of the fact that there is a very long lag and lead time to be able to put up a house. You obviously have to identify land, and you have to prepare the land. And there's obviously a lot of regulations and a lot of rules that go around this. And then you have to actually put up the house itself. There's also a labor shortage in the housing industry, which means that they are unable to actually put up the houses, even if they've gone through all the previous steps that I mentioned. What it means is that this boom is likely to continue and to keep going, and we want to be part of it because we know that the millennial generation is huge. Gen Z is pretty big. When you combine the two, it represents a massive amount of demand, and that means more and continuing demand for housing. And this is why we are going to keep ITB on from our last mini portfolio, which was STIX. So those are the 4 ETFs in our mini portfolio, HAPI, happy. Don't forget the happy face emoji that goes along with this ETF. And once again, we're doing this because we're trying to show you the kinds of things that we focus on at Profits Unlimited, which is my flagship newsletter, and at our publishing company, which is called Bull Profits. So if you're interested in that, check into Profits Unlimited and check out HAPI and see if it will make you happy. Certainly the folks that got in on sticks did pretty well. I believe that we have a good shot of doing at least as well or better. So if you're interested in doing well, try out HAPI and see how it goes. And we will be continuing to track HAPI over 2021 and keep giving you updates. So make sure you stay subscribed to this channel. And of course, give us a thumbs up and comment below if you are going to go along and buy into HAPI and if you made money on sticks. So that's my video for this week. I'll have another one for you next week. Until then, this is Paul saying bye.